Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing David, Peter, and Heeman from BQE Water, which trades under the TSX Venture under the ticker BQE. We initiated coverage on BQE back in March with a $55 target, which was recently increased to $71 based on the strong financial performance of the company. BQE provides water treatment and management solutions to clients in the mining industry. Our basic thesis in BQE is that its service offering is becoming increasingly important to miners as environmental regulations around the world become more strict. This has allowed the company to rapidly grow its recurring revenue base as well as expand its margins. The stock remains cheap today at 8 times forward EBITDA. Gentlemen, thank you for being here today.
Thank you for inviting us. Yeah.
So for those that are unfamiliar with the story, the gentlemen here are going to kick it off with a brief company overview, and then we're going to move on to some Q&A.
Okay, great. Just going over a few slides that introduce the company. As Nick mentioned, BQE Water is really a specialist in treatment and management of water in the mining, metallurgical processing, and metal smelting sectors. We have focused really on innovative solutions in this sector, and our business is largely driven by environmental compliance and social acceptability of new natural resource projects. For those of you who are not familiar with the water sector in mining, I just wanted to briefly mention that water really intersects all the aspects of the mining business, from the production side, where basically over 90% of the metal extraction happens in water. And of course, over the course of mining and metallurgical processing, water coming into contact with reagents and the rock surfaces creates contamination. That contamination is now heavily regulated to the extent that even storing water in ponds and tailings dams is considered an environmental liability. The image here shows the failure of the Mount Polley tailings dam in BC, happened in 2014 due to the large excessive storage of water in the tailings. This is precisely what we want to avoid. And the final aspect is really social acceptability and sustainability. And the image down here, you see the double-headed trout as a result of long-term chronic selenium toxicity to fish. And again, the social acceptability, in our opinion, is really what is driving both the industry as well as the regulations moving forward. What makes us unique is several things. One of the things that make us unique is expertise and intellectual property we hold in key areas that are really important to the miners today. The four are shown here. It leads with cyanide management, being cyanide recycle, cyanide recovery recycle, as well as destruction, metals, removal of all sorts, as well as selective recovery of metals of value, sulfate, and selenium. All of these sectors are really sectors that are critical because the regulations are very tough and continuously becoming more stringent. The most recent example of that would be the selenium regulations that really changed over the last decade. I just wanted to highlight that, over the course of the existence of the company, we've built 30 treatment plants worldwide. And in the process of treating and discharging over 20 million cubic meters of wastewater annually, we recover roughly 4,000 tons of valuable metals from waste selectively, mostly copper, but also some nickel, zinc, cobalt. And also over 1,000 tons of sodium cyanide is being recycled for gold and silver recovery. This slide really summarizes the other unique feature of the company, which is we're focused on growing recurring revenue. So the slide shows how we make money from different stages of projects. We have mines that are going through permitting and development. We provide technical services that are non-recurring. Those would be laboratory testing, engineering, technical expertise that pertains to selecting the right approach to water management, etc. Finally, when the project moves into construction and operation, we end up we design and operate the treatment facilities. And over the course of the life of mine, and that varies, but typically we would be looking at least 20 years for base metal mines. We end up operating the facility and generating recurring revenue from the operation. And the way we charge is really a tolling fee. It's not linked to how many people we have in the field running the plant. It's really linked to the cubic meters of water, clean water meeting discharge, and the plant meeting its capacity. So the bulk of the revenue really comes in terms of over the life cycle of the project comes from this recurring piece of operations. And then finally, the mines eventually run out of ore and go into closure, and we switch again into a combination. Sometimes it's the recurring revenue, sometimes it's technical services that support the ultimate closure of the project. I just wanted to point out also that most of our projects in our pipeline are sole source, meaning we're not competing or bidding against anybody else. And that's primarily driven by the unique expertise and intellectual property. The customers literally don't have anyone else to provide exactly what we provide. I guess this slide shows the overall financial performance of the company in a nutshell over the last 5 years. You can see that on the left, we've had a growth in both the proportional overall total revenue as well as the recurring piece. And the recurring piece is what's increasing most rapidly now, because all the projects that we're in permitting and engineering and construction are gradually getting into operations. And on the right-hand side in the table, you see that the metric of the compounded annual growth rate over the 5 years in the various KPIs or metric for the company, including the revenue, EBITDA, net income, as well as working capital. And we're very happy about these numbers. I included a couple of slides here that are new slides that are not in our corporate deck yet. And I included these primarily because we're getting questions about fluctuations in our revenue quarter to quarter. And one of the sources of fluctuations is the technical services that are non-recurring, right? The operations are recurring, technical services are non-recurring. And these technical services vary from, a contract for 4 weeks to 4 months. Sometimes the longest probably technical services would be 1.5 to 2 years. But eventually these contracts all run out and they're non-recurring, and we move on to the next one. And so there is a certain level of lumpiness in the technical revenue. And this slide is just basically to show you overall over the last 5 years, there's the total numbers, and then there is the quarter to quarter in the bottom in terms of the actual absolute dollar value. The interesting thing is that when you look at the patterns, increasing from Q1 to Q4, starting high in Q1, going low in Q4, all sorts of shapes of these quarter to quarter fluctuations. And that's also shown on the next slide, where I basically show that if you follow the company quarter to quarter, you will see fluctuations in our technical services that may on a quarter-to-quarter basis be quite significant. But again, when you go back to the annual numbers, as well as the 5-year annual metric, you put the performance of the company really in the perspective. And from the investments, highlights of why to invest in BQE as a small cap, micro cap company. We believe that we've really mitigated all the major risks associated with micro caps, be it management, technology, the commercial demonstration of its IP, creating customers and retaining the customers, whereby we are constantly renewing our operating contracts, or the non-recurring revenue, the technical services are coming from the same customer over and over again. We have significant cash in the bank, no debt, and I guess we are in the right sector at the right point in time, where we really are in the intersect of environment, water, sustainability, working with indigenous groups, and in the natural resource sectors, which some believe is going to go through a long-term secular boom cycle. And that concludes my presentation. Thank you, Nick.
That's great. Thank you, David. And it's definitely a company where you're looking at it on an annual basis is the way to go. So let's move on to a couple of questions that we got from our audience on Twitter. So firstly, tell us a bit more about the industry and the companies that you guys compete with.
So in terms of competition, this question is really aimed at understanding the competition. Mm-hmm. We actually, in our corporate deck, I didn't include the slide in the short one. We have a nice slide that basically shows that in the sector, there are either very large companies like multinational consultancies such as WSP, Tetra Tech, Stantec, SRK. There are multidisciplinary international consultancies that provide engineering services, primarily EPCM. They have some science as well, and sometimes they get involved in water, but they have no intellectual property, and they're not innovators. So they're how would I say it? They can tackle certain number of projects just because the regulations are maybe not as tough in certain areas. But when it comes to the expertise that we have, they actually have to come to us. So in projects where they don't need us, they can go and do it on their own and effectively compete. Although, again, we don't actually therefore compete with them. The other on the market from the large entities perspective are what we call the Walmarters of water treatment. And those would be, the Walmarts would be Veolia Suez, or now Xylem and Evoqua. There was a merger between Xylem and Evoqua. These are monstrous companies from the perspective of supply of equipment, that they focus primarily on supply of equipment and overall solutions, but they're really driven by the market, overall water market size. We have to understand that the mining sector is a very, very small portion of the overall global water market. So when Veolia or Suez talk about water and their water division, 99% of that revenue is coming from desalination, from wastewater treatment, from domestic municipal type projects, not from mining. They may have industrial sector as well, oil and gas and others, but the mining is a very small piece. And they're really not set up to service the mining sector properly because of their size. The typical size or capital cost of a mine water treatment facility would be about $30 million. Well, that's too small for them. And moreover, you need to customize because every mine site has different types of water, different discharge regulations, different receiving environment. And so they cannot really customize well. And then on the other side of the spectrum, you have BQE Water and several smaller players like us who have their own niches. But for example, passive treatment, we're not doing passive wetlands, for example. So there are several players in that area, but no one really with the same kind of toolbox we have. And, having said that, one of the things that we talk about in our presentation and slide deck is the gap in the middle, where we believe that there is really space and room for a larger entity that would, service the sector or be properly sized for the sector, understanding that, we're a microcap and we're working with, companies that are monstrous in terms of metal production, Glencore and, Freeport and Junction Copper. Those are large companies, very small. So there's room in the middle there where, a larger entity would really be better positioned to service the sector.
Right.
I do, David and Nick, if I can just add one slightly different angle to it as well. In looking at competition, there really is no direct competitor that does what we do, Nick. And I think the easiest way to describe that in short answer is that You know, we earn our money out of operations. We're incentivized to get to the answer quicker. If you look at all the other engineering type groups that David's mentioned, they earn their money out of man hours or supplying equipment or whatever it might be. So their incentive is actually to elongate that process of finding the answer, because they're not incentivized to get into the operations. We know where we earn our money, so we're actually, you know, the customer base is starting to learn that we don't elongate that process. We don't want to be consultants. We want to get in and operate, and that's where we earn our real money. So that also differentiates us from our competition. If you look at time to permits, time to getting through all the different stages the miners have to get through, we're aligned with them in getting there quicker. And sorry for interrupting you, David, but I just think that's important.
No, thank you. Thank you for jumping in.
No, that's great. That makes sense. Okay, and then shifting gears maybe more on the innovation side with your selenium technology, why do you guys consider that disruptive to the industry?
Yeah.
Well, we consider it disruptive because of several things, and understand that our audience is not technical. So I'll try to sum it up in a way that's really understandable to everyone. If you have, so far, the only technology that was on the market, we're the only non-biological approach to selenium. So all the other technologies are basically commercially proven, are biological. The biological systems are inherently systems that require a lot of, you cannot stop biological. You know, we basically, the non-biological system, you can start, stop. We have one plant that's currently operating from 9 to 5, and it's shut down over the weekend. Biological would never be able to do that. Some projects require just that. They don't have to run all the time. In fact, in jurisdictions such as Canada, where a lot of the mine sites have only seasonal discharge, let's say we start discharging in April and have to stop in October, that's the permit. And even the environment, becomes frozen. They can't discharge. So if you have a situation like that, you really need a non-biological answer to your selenium. On the regulatory side, our technology is really disruptive in a way that we can meet effectively not only the most stringent regulations that are out there for selenium at the end of pipe, but we do so, we can actually go way below those regulations. So basically get into almost non-detect. One of the disruptions really in this regulatory space is that we meet the regulations that are meant for the receiving environment. So regulators regulate the rivers, the creeks, the water quality in the environment. We meet those regulations at the end of pipe. And that's fundamentally shifting the goalpost, because suddenly the mining industry is not relying on dilution. So if you have a project that you want to permit and you want to gain social acceptability and support from indigenous groups or local communities, and you tell them that you're not relying on dilution and you can discharge regardless of what the water situation is and what the flow in the creek is, then that's really a major shift. And just to highlight here, the reason why the Mount Poly Dam failed is because it had high selenium and it was discharging into a creek that had a very small flow, and they relied on dilution. So they couldn't get rid of the water fast enough. So if you have technology that can meet the in-stream limits right at the end of pipe, it's a game changer. And then finally, one of the really important features is that the biological systems, in the process of removing the selenium, they convert a very small amount of the selenium into highly bioaccumulative organoselenium form, meaning they remove maybe 95% of the selenium that's in the water, but whatever they leave behind, the small quantity, can be more highly bioaccumulative than the selenium that was there in the feed in the first place. Now, the regulations that are out there are not regulating just water quality, but also fish tissue accumulation in organisms. And so using non-biological approach that does not convert any of the selenium into the bioaccumulative form means that there is no risk on the fish, on the actual bioaccumulation, the actual environmental long-term impacts on the environment. So for all of these reasons, we consider it disruptive.
Yeah, and if I add that, Nick, in layman's terms, we create zero waste. Any of the other solutions, there is some waste or something to be dealt with, or a can kicked down the road, whatever you want to look at. We actually, again, in layman's terms, we actually remove the selenium and actually create a product. It's not a product we could sell, but we could give it to the steel making industry. So it's very important in everything we look at. We're not looking to kick a can down the road. We're looking to create zero waste. And that's another, what David was saying that, but I'm just adding it in layman's terms, So.
Perfect. Understood. Okay. And then shifting over to more of the project side, there were two mines that the audience wanted to know more about. Firstly, the MTO Mine, which you guys signed on last year. And then secondly, Seabridge's KSM mine, which is more in the technical services stage, but might move on. So tell us a bit more about those two and where you see them going.
Yeah, so good questions. Obviously, some folks in the audience that have been following the company for a while. On the MTO side, I just wanted to, for broader audience, wanted to remind them, MTO Mine is a copper mine located in the Yukon, operated for approximately 15 years. And last year, not last year, the year prior, in 2022, we've got involved in the operation of the project. So we actually had an operating contract with the mining company, and then the mining company actually ran out of money. And last year we transitioned into a ongoing operating services agreement with the Yukon government directly. The mine is currently, it's pretty evident the mine is going through closure. There was a potential for the sale of the mine to a new owner. I think that's highly unlikely moving forward. And certain activities were initiated on site that indicate the site is going to go into long-term closure. So we're moving, in the graph that I showed in the presentation, we're moving into the closure phase. What does it mean for us? Well, several things. In terms of water management and treatment, the contamination of the mine water doesn't stop, it continues. And the sources of contaminated water are there. And the sources of contamination will take years before they actually are diminished. And therefore, active treatment at the site will be required. Initially, the projection was for approximately 3 years. We will see how much time it's required. But the time horizon of 3 to 5 years seems to be reasonable in terms of active water treatment using the existing water treatment facility. And, how much water we would treat and et cetera, it depends obviously on the weather, on the precipitation, et cetera. But there are lots of activities happening on site that affect how long this active treatment would take. We currently have our contract for this year. And I think that the government that is conducting a lot of activities on site related to closure will reassess at the end of the year what's happening next year and the year after. And it will really depend on multiple factors that at this stage we don't know. We cannot predict the future. But as I mentioned, we would anticipate the time horizon for the active treatment for closure to be on the order of 3 to 5 years.
Seabridge?
KSM. So the KSM project is a project in development. It's been approved, and it's currently at the stage that they're really waiting for the federal government to recognize their substantial start. So the permit that was issued to Seabridge is now, in order to hold the permit and continue with the development, they have to demonstrate what they call substantial start, which means that they have to spend a certain amount of money on developing the overall project. So they're spending money on building access roads, power lines, some of the facilities on site that are required. And I guess in the early stages of the project, there would be 4 temporary water treatment facilities that would be required to manage water during the actual mine development construction phase. And then when the mine actually goes into production, there is a large water treatment facility for the ongoing operation. The life of mine is expected to be over 50 years, I believe. So it's a very long mine life. And so our involvement with Seabridge is on a couple of fronts. One is on the development side. So we are in charge of designing several of these temporary treatment facilities. One of them actually involves demonstration of selenium treatment at a pretty large flow. And those temporary treatment facilities and the selenium demonstration facility, they would happen immediately as the project goes into construction. So they're not linked to production. They're happening early on. And then we also have, our Solinex technology applied on the large scale during operation. And that really was part of the overall environmental approvals for the project to get to the 2 ppb in the receiving environment. So that's our strong position in the project.
Okay, great. And then second last question here. How large is the opportunity for coal ash ponds, and what should we expect going forward in terms of taking on projects?
So the coal ash ponds, a very different sector. Obviously, it's not our own bread and butter. So we are not actively marketing in the power sector. However, we're marketing through partners. We're trying to find channels, partners who are well established in that sector and play in that sector. We also have, I guess, very good foot in the door through our first facility that removes selenium for one of the utilities at an ash pond in the eastern U.S. And that project is going extremely well for us in terms of demonstrating the applicability of selenium for ash ponds closure. So that for us is a marketing piece in itself. But as far as the size of the opportunity, it's hard for me to comment ultimately what would be the size of the market. From the immediate BQE's perspective, I would say that it's quite realistic. I would expect that if we find the right partner and get into projects early, we can probably expect 1 or 2 projects, ash pond projects per year easily to get to that stage. How long would it go on like that? I don't know, but I suspect that the ash ponds will probably, the cleanup of ash ponds is a market for 10, 15, maybe 20 years max, but it's not a vertical that's permanent vertical. These ash ponds will close and that's it. There's not going to be a return of that. So I would expect that if we're successful with the partnership, we could get to 1 or 2 projects a year from that sector coming to us. And the time horizon of about 10 years of repeatable business.
Okay.
Yeah.
Wow.
But I would caution people, Nick, this is very early stage for us. Don't expect us to get 1 or 2 projects next year. We're not going to do that, So
Understood.
Yeah, we are looking for partners, and we've had some contacts, but we're not yet at the position where the partner is actively beating drums for us.
Okay.
Yeah.
For sure. And then lastly, just to sum it up, tell us more about the long-term outlook beyond 2024, specifically for the company maker projects and getting some of those on board.
So, I guess, again, for folks who are not familiar with the company maker project, so we have several opportunities in our current project pipeline that we call company makers because they are substantially larger than any of the projects that we've worked on so far. They're larger both in terms of the capital and therefore technical services component, as well as the ongoing recurring revenue from operations component. And so those would be major catalysts for changing valuation of our business. We have basically three. If I can kind of summarize, we have three of them. They're all projects that we've been working on, all projects we are getting paid for, working on by their clients. And they're gradually getting to a point where, a trigger would be pulled on the main sort of go-ahead to actually build facilities and then operate them. We would expect the decision on one of them to be before the end of this year. And we would expect that the technical services for that potential company maker, if it goes ahead, we would start seeing some impact on our technical services next year. The second one, again, I would say that it's a time horizon of probably 2 years. Within 2 years, we would see the movement. And the third one is really a slow burn. So that would be probably time horizon of 5 years. So they're kind of staggered, and they're all, as I said, they're all projects that we're actively working on. So they're not sleepers. They're not, a wishful thinking. They have different drivers. All of them are actually, in terms of overall driver, they're all driven by environmental compliance. But the stage of development and enforcement of regulations may vary from project to project. So that's what makes them different.
Yeah, and I would add, Nick, whilst they're out there, they're very real. Every one of the clients that David's talked about has spent over 7 figures with us over time. These are not pie in the sky. We've still got our organic growth. And we realised that something that David alluded to earlier is this big gap in the market between companies $100 million and below and the companies that are multi-billion-dollar companies. There's nobody really sitting in that space, the 500 million to $1 billion space. And that space is going to be filled by somebody. So at the end of the day, there will be some M&A activity in this space. It could be in either direction, we don't know. But what we're not going to do is sit on our hands and just allow it to happen. So we will be looking, as you can see, we've got some cash. So we will be looking at possible M&A ourselves, and it doesn't preclude it happening the other way or whatever. But as a company, we feel somebody's going to fill that space of 500 million to $1 billion, So, that's looking at that period beyond this year, so.
Okay, perfect. Yeah, those were all the questions, so thank you for walking us through that. We're looking forward to seeing the upcoming releases and following along with how things develop over the next year. So for our followers that haven't seen our research on BQE, you can find it all on our website at atriumresearch.ca. And again, gentlemen, thanks for the time.
Thank you, Nick, and thank you. Thank you to the questioners. Good questions. Thank you.
Thanks, everyone.
Thank you, everyone.